Hey there, welcome to Kneppy Invest. We are full into December quarter reporting season, and I thought I'd feature a company that I was a shareholder of. I saw the share price run up a fair bit. I thought I'd be smart, take some profits, and then buy back into the company when the share price fell. Well, everything was going to plan. I sold near the top, share price fell. I just forgot to buy back in. And ever since I forgot to buy back in, the share price of this company has gone higher than the share price I originally sold the company at. So this was a little bit of a mistake on my part. It was a good plan. I just did not execute the plan. But Revasum, which is the company I'll be featuring in this video, the market has become bullish about this company ever since the new CEO came into power in September of 2021. In this video, I'm going to look at the company's December quarter Appendix 4C and why, maybe speculate why the market is quite bullish about the company moving forward. So let's get stuck into it and talk about what Revasum actually does. Revasum designs and manufactures capital equipment used in the semiconductor device manufacturing process. So in and itself, the semiconductor, I think there's going to be significant growth in that area over the next few decades, and Revasum will play a part in that growth. Now, when it comes to the manufacturing process, they're really involved in silicon carbide. So you take the silicon carbide powder, it goes through this long process till it becomes a semiconductor that is used in electric vehicles. And I'll talk about why they're talking about electric vehicles in a few seconds. But during this process, the silicon carbide needs to go through a grinder and a polisher. And that's where Revasum plays their part. They have designed two pieces of devices called the 7AF HMG silicon carbide grinder and the 6EZ silicon carbide polisher. And that eventually out pops a semiconductor towards the end of the process, and then it gets put into an electric vehicle. Now, this is something I've noticed that Revasum have been talking about recently in their presentations. They're just suggesting that the growth the world's going to see when it comes to electric vehicles, that Revasum will play a part in that because they're playing a part in semiconductor manufacturing, and a lot of semiconductors will be used in electric vehicles. So what Revasum is saying to the world is, hey, look at us. We are playing a part in the growth of electric vehicles. And they're really throwing this out there. And I think it's a really good strategic position the company is taking. I think it is playing a role or a part in the bullishness the market has in regards to this company. Revasum was founded in 2016 and they listed on the ASX towards the end of 2018. And to be honest with you, the first 3 years that Revasum was on the ASX was not good news for shareholders because the share price did fall by quite a bit. You'll be able to see that when we look at the weekly chart later in this video. But things really turned around for the company and the share price as soon as Rebecca Schutter-Dodd was promoted within the company. She had different roles than CEO, and then she was made CEO in September 2021. And you'll be able to notice that as soon as she was made CEO, the share price started to go up. I don't think that is a coincidence. I do think the market really applauded and liked this appointment, or maybe we should call it a promotion of Rebecca Schutter-Dodd to CEO. And really, to be honest with you, the business has turned around since her appointment. The biggest shareholder of the company, in fact, they have a majority stake, is First Hand Capital Management. They have a 51% holding, and WH Soul Pattinson has a 3% stake in Revasum as well. And that's actually a good thing for me. I like to see companies like WH Soul Pattinson have good holdings within companies I do like. It sort of acknowledges that maybe this company has a future. And the current market cap of Revasum at 88 cents is 94 million, so not too high. There is possibility that market cap will climb significantly more if this momentum we've been seeing in the share price continues in the future. And the ticker code for Revasum is RVS. I'll slightly touch upon the financial state of Revasum, and this is looking at the trailing 12 months, which is up until the end of June 2021 because their calendar year is the same as their financial year. Revenue was 13.5 million, and if you do look at the history of this company, revenue has been dropping. But I'll show you in the next slide that there are expectations that revenue will start to explode in the next few years. The company was not operational cash flow positive nor profitable in the trailing 12 months. They did have $5.1 million of cash because of a capital raising, and the price to sales ratio is 6.1. But it's quite foolish just to look at Revasum's numbers in the past because it won't tell you what's going to happen with this company in the future. And there are some expectations from the company. And if the company does meet those expectations, the future is looking really bright for this company. So let's have a look at those expectations the company has put upon itself. Revenue has been dropping for Revasum over the past few years. And based off the expectations from the company, that has come to a completion. They did give us some revenue guidance for financial year 21, which has just come to an end, and financial year 22, which is the year we're in right now. And for financial year 21, they expected revenue to be between 13.3 and 15.6 million. So there is potential. Revenue will drop from what it was last year. But then we have a look at financial 22 expectations. They expect revenue to be between 25 and 35 million US dollars. So in itself, this is really good news for the company. But it was some other guidance the company gave that made me even more excited by what they gave us with their revenue guidance. So let's have a look at that other guidance, which made me more excited. In one of the presentations they did give us recently, there were 4 points or 5 points here that made me even more excited than the revenue guidance they did provide. And the first point was in regards to disciplined management. And this tells me, because they're focusing on growing the company sustainably, this tells me they want to grow their company through cash flow from operations or free cash flow in the business. They don't want to do many more capital raisings because capital raisings are dilution or are dilutive to shareholders. They want to grow the company sustainably, and that's a really important point for me. They also mentioned that gross margins are improving up to 35.4%. And then they talk about operating cash outflows. So what we want is operating cash inflows. And they just mentioned here that operating cash outflows significantly reduced with outflows in financial year 21 related to building inventory to support increased customer demand and manage supply chain challenges. So they are aware that they want to improve, or they need to improve, the operating cash flow, and they are heading towards being operating cash flow positive. And one of the good things about this is they are building inventory. So they acknowledge that these machines they are selling are more in demand. And then they mention operating expenses reduced to an appropriate level. And I think this was one of the problems Revasum had in the future. Their costs were just too high for where they were in the business life cycle. So I think this was something that Rebecca Schutter-Dodd was doing, and she knew this. She wanted to reduce some of the costs in the business. And then the most important point here, and the reason I got a little bit excited when I read this presentation, they expect to be free cash flow positive in financial year 22. Now, this is not operating cash flow positive. This is better. This is free cash flow positive. So this means they will be operating cash flow positive, and even the money they spend on capital expenditure won't be enough that they won't be free cash flow positive. And this is how you grow sustainably. You remain free cash flow positive, and you can grow the business through the cash flow coming into the company. Before we have a look at the most recent Appendix 4C for Revasum, I just want to go back 1 year ago. And to be honest with you, I was not this excited about the company back then. I was keeping not a close eye on it, but I was paying attention to how they were performing. At this point in time, they were not performing all that well. And in the December quarter financial year 20, they had almost $3 million of receipts, but they were operational cash flow negative by 864,000. And for the full year, they were operational cash flow negative by 5.5 million. Another probably red flag I had against Revasum at this point in time, they only had $1.4 million of cash, and they actually had to borrow $1 million. So their loans were actually increasing at this point in time. So that was a significant red flag against this company. So let's see how the company has improved in their operations during the past year. Receipts from customers has increased by $2.1 million in the past year. Now, some of the costs have increased with that increase in cash receipts, but fortunately, the increase in costs is not as great as the cash receipts. So instead of being operational cash flow negative by over 800,000, they were operational cash flow negative by only 331,000. But again, more importantly, the company expects to be free cash flow positive in financial year 22. So things are moving in the right direction for this company. If you know anything about me by now, if you watch my Appendix 4C videos, you'll know that one of the things I look at is receipts history through time. And I want to see receipts growing through time. That's one of the most important factors I do look at in all companies. Well, I look at either receipts or revenue. Even though they aren't similar, they do go sort of hand in hand. But anyway, if you go back to the December quarter 2018, well, just after Revasum did list on the ASX, you can see the first few years, receipts were going up and down, a lot of lumpiness there. And then we saw a really bad quarter in the March of 2020 around the COVID-19 financial panic time. Receipts were only 2 million, but from then we have seen receipts starting to grow at a more consistent rate. So I'm really going to ignore the first few years that Revasum was on the ASX because we were seeing revenue drop. It was a different management team. We've seen Rebecca Schutter-Dodd become the CEO of the company, and things are moving in the right direction for Revasum. Now let's have a look at some of the charts for the company, and this is the weekly chart. I've already mentioned the first few years, maybe 3 years, the company was on the ASX. Things were not going good for the company. In fact, the share price high for Revasum was the first week they were listed. Share price almost reached $1.87. And then the share price just kept on falling for the next about 2 years. In fact, the share price fell from $1.88 all the way to a low of 19 cents. And then there was a period where the share price went sideways, and this was for the majority of 2021. But you can see a massive spike in volume in the share price in September of 2021. And that was around the time that Rebecca Schutter-Dodd was made CEO of this company. And the share price has moved into an uptrend just by looking at the weekly chart. So the weekly time horizon, there is an uptrend in Revasum right now. And the share price has reached an almost 2-year high. Now let's have a look at the daily chart. This goes back to November 2020. And the most important thing here is there was a period between November 2020 and the start of October 21 when the share price of this company went sideways. And that is exactly what you want to see after a long period where the share price has fallen. You want to see a consolidating period. And we had that for Revasum. I took a position within that consolidation period, and maybe I should have just waited for a breakout. And that breakout happened at the start of October, just after Rebecca Schutter-Dodd was made CEO of this company. And the share price rose from about 40 cents to a high of about 87 cents in a very short period of time. And I thought I'd be smart, take some profits, and then buy back in when the share price had fallen. So the plan, that was a plan. Unfortunately, I didn't stick to the plan because the share price fell all the way back to almost 40 cents, which would have been an ideal time to take a position. Now, at that point in time, I thought maybe the share price could fall even further. But over the next few trading days, the share price actually rose from about 40 cents to above 70 cents. So I thought I missed my boat. And then the share price fell again to just over 50 cents. And I thought maybe the share price could fall even further. And then the share price since then, about a month and a half ago, has risen from about 52 cents all the way to a high of 95 cents. Now, the other day, last day of trading for the trading week, share price fell from 95 cents to 88 cents. And we could see another down day on Monday, the 24th of January. And the share price falls into the 70 cent range. I will take a position in this company again. That's all I have for this December quarter Appendix 4C video for Revasum. The market right now is bullish about this company, and I think rightly so. The future does look bright for Revasum. If you do have any questions about this company, or maybe any other company on the ASX, just leave it a comment, a question, your thoughts in the comment section of this video. I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.